Okay, ladies and gentlemen, this is a continuation of section 4, and it's a nice way to summarize the information contained on the 4 basic accounting statements: the income statement, the balance sheet, the cash flow statement, and owner's equity. Now, one of the things you're going to have to become familiar with, which is very important, is the categories that appear on each of these statements. And so at this point, you may want to stop the video, you may want to identify what the question is, and you probably want to get most of this information contained on this chart in your notes. But let's quickly go down the individual categories. In the income statement, as you would expect, there is something called sales, stuff you sell, and that is considered also revenue. Then you have the cost of the goods that you sold, and that's considered an expense. Then you have operating expenses as a category that could be advertising, that could be what you pay your salespeople. That would be an expense. Your production workers earn wages. That would be an expense. And then after you subtract all your expenses from sales, you get income, revenue minus expense. Now the balance sheet has a bunch of stuff on it. And as we talked about, it has asset accounts and liability accounts. And the third part is owner's equity. So if we kind of go through some of the common asset accounts, cash is obviously an asset, inventory is an asset, money people owe you, accounts receivable is an asset, money that you owe people, accounts payable, that's a liability. Let's say you get a patent, that would be an asset. Miscellaneous money you owe people, that would be a liability. A long-term bank loan, that would be a liability. You have to pay that back. Your building, obviously that would be an asset. And then we have 2 categories down here, retained earnings and common stock. That would be considered owner's equity. And those would also appear on the owner's equity statement, retained earnings and common stock. Okay, then we have cash flow. As we talked about, cash flow is oxygen. Cash from customers, that would be cash coming into the business. Cash paid out for inventory, that would be cash going out of the business. And cash paid to employees, that would be cash going out of the business. So you're going to need to make sure that you kind of understand where these particular categories belong on each of these statements, because it's critical to the foundational information you need for college accounting. All right, guys, have a good evening.